How much more are Jay Powell and company going to do from here on out, do you think?
I don't think they know, and I think he was very frank about it. He's navigating by the stars, as he said, in a cloudy night. By the way, having navigated at the Naval Academy as a midshipman, when you can't navigate by the stars, you end up navigating what's called dead reckoning. There's a lot of uncertainty there. And I think that's what he is frank about, admitting. The one thing I think our panel and observers and pundits should realize, there's no GPS to monetary policy. There's no precision. It's a matter of judgment. And you want to have an experienced captain steering that ship, and that's what I like to remind people about. Powell's been in this place either as governor or as chair since 2012. He's an experienced captain, an experienced skipper. And what I like about him, instead of just talking in Fed speak and making it confusing for everybody, he's very honest. And I don't think they know. I think still it's possible, maybe 50-50, that they could move in September.
Okay,
the thing is very fair. Clear, though, Scott. The thing is super clear. But they will not abandon the 2% target while he's chair. They will not indulge in serious discussion about R-star and neutral rates. That's theoretically a concept, but they're navigating in the real world, and it's a very difficult world right now.
You say he's an experienced skipper, and of course he is, but he already misread the map once when he talked about transitory. And now the
You and I talked about this many times, Scott.
But let me finish. Let me finish, though, please. The worry now is that people think he's going to drive us into an iceberg by doing too much. By doing too much, because even Mester says, it's all about risk management. Then my question to you is, are the risks now skewed towards doing too much? Because even the chair himself today says, we just don't know about the lags. There could be considerable drag still to come.
I like the iceberg thing. I can just see him and Janet Yellen on the bow of the ship. So it's quite an image. But I think he's been frank about that, too. Remember last year he talked about you're going to create some pain. And it's very clear the singular focus here, as long as we have the kind of employment numbers we have, the kind of growth numbers that appear to be manifesting themselves in this quarter, they will err on the side of quelling the inflation drag. And that's their singular focus right now. They're lucky the economy is relatively strong still. Employment's at a 50-year, unemployment's at a 50-year low. The pressures on inflation are coming down. They're disinflating, but they have a job to do. And what I get from the talk following on last year, it's a continuum. They will keep at it. Loretta made that very clear in her interview.
Mm-hmm. Do you think the stronger than expected economy, the one you just referenced, has thrown a wrench of sorts into the Fed's plans?
A wrench, no, but I mean, it's just another variable they have to take into account. It's actually good news, Scott. We're continuing to steam along. I'm going to kill the naval analogy here. We're still steaming forward. And we have a very good skipper at the helm and a good committee that's advising him. So I think this is good news. The market has reacted in a way, to the degree markets react, pretty neutrally here, as was just discussed. So we've had a severe correction. The market didn't overreact to that talk that he gave this morning. And we're steaming along at a decent speed. And the boilers aren't overheating, but they're still a little bit too hot.